please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
But there goes the bell, and the Nifty Bank is the only one that's in the red. The Nifty is flat, actually.
Trend that we've seen in global markets in terms of both the tightening liquidity and the trade wars, all contributing towards significant appreciation in the dollar.
Listing price of both Rights and Fine Organics, a good listing for both of them.
JV goes for an IPO, then the stake of Thyssen will be a little higher, will be at around 55%. Tata Steel stake in their IPO will be lower at around 45% approximately.
Very minor pullback which is currently underway. So the Nifty's seen a recovery of close to about 30 points from the low point of the day. We're still down 80 points on the Nifty.
Let's talk about stocks which made a move. What dragged the markets today? Today actually HDFC Bank was on the way down. After a long time, that stock made a move lower, so 2% lower.
A late recovery pairs losses, but markets end with some sharp cuts. Sensex sheds nearly 160 points. Nifty loses over 0.5%. Midcaps underperform the blue chips.
Tata Steel-Inc., the landmark joint venture with Germany's ThyssenKrupp, the combined entity expects a turnover of around $20 billion. In sales, Tata Steel stock ends 1% lower in trade.
Motown clocks healthy sales growth in June. Bajaj Auto clocks highest sales growth in over 8 years. Maruti reports a 36% sales jump. Royal Enfield reports an 18% growth, but misses street estimates.
Vedanta rallies in trade after it announces plans to delist from the London Stock Exchange. Anil Agarwal's family trust offers a 27% premium to buy out the 30% free float in that company.
Nifty Bank loses over 100 points, dragged down by HDFC Bank and Federal Bank. But the Nifty PSU Bank Index ends in the green after the government gets into a huddle to finalize the creation of an asset management company to tackle bad assets. Those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today Talk Back, the show where we tell you all about the zigzag that happened today in the 8 hours of trading in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Hi Lata. Looked like a pretty bad way to start the week, but wasn't that bad by close. As you said, over the next 30 minutes, we will talk about the top 5 market stories. Our guests will answer your questions. Joining us now to answer the questions that you send our way are Deepan Mehta and technical expert Ashwini Gujral. Gentlemen, thanks very much for being with us here. Appreciate your time. But before we start the Q&A session, let's quickly wrap up the day's events. What really happened? What were the cues which dominated trade through the course of the day? Lata.
Well, actually, all markets gave us negative cues. The Asian market started badly. It's actually worries over tariff wars. And even as we speak, there is a talk that some 300 billion of goods in Europe may face tariff issues or tariff walls. So Asia, Europe, all of them were in the red. A minor recovery here and there, but still remained in the red, all markets, and we did no better. From the word go, all the gains of Friday looked like ready to be whittled down. Again, as one saw minor recoveries in the Asian and European markets, we kind of held our breath. We closed above, well above the 10,600 mark. Psychologically, that can be satisfying. It can also be satisfying that we have way away from the 100-day and 200-day moving averages. And therefore, at least the lower bound of the market is not lost. That 10,500 or 550, even 590 is getting protected as of now. But it's very obvious that all rallies are being used to sell. And anybody who thought that this was the thing on Friday evening will be ruining his luck. And next time on, you will have less people climbing on to a trough. You could see that today as well. The market at no point showed that the dips were seminally getting bought. There was just short covering or so it seemed. But from the stock specific, could you glean anything better?
I mean, sea of red, basically, Lata. So not very much different metals, energy, real estate in terms of sectors which were most under pressure on your screen. Large caps which were down and out, NTPC, Ambuja, Bharti, Hindalco, Adani, Grasim, ONGC, HDFC Bank. I mean, I'm just listing out 7-8 names. and the larger ones which lost quite a bit. I think on the Nifty now, it's starting to reflect what the broader market has been showing for a while now, that the situation is not as okay as the Nifty was indicating. I mean, even after today's fall, the Nifty is just 5-6% off the all-time highs.
Yes.
Okay, large caps which were okay. Asian Paints, Infosys, Bank of Baroda over the three names which I want to highlight. Broader market weakness across the board. Look at Jindal Steel, Just Dial, Reliance Capital, something like Adani Enterprises, big cuts, big volumes, Nalco, JSW Steel, Indiabulls Real Estate, Avanti Feed, Dilip Bilcon is 1300 is fallen to high, all-time high was closer to 1300, is about 600, 650 now. Shrey Infrastructure. And there were a few names, I mean, as always in any market, there would be a few names which do okay. Matrimony was one of them. I mean, big move. It was up 18% at one point. We spoke with the management, 13.5 higher. Motilal, a big fall. It's already seen a big fall, 6% higher. CG Power was up about 5.5% as well. Lata.
Fair point. Well, that's the situation as far as stocks and as far as the macros are concerned. Highs are getting sold, and at lows there is a bit of short covering. But is it going long? We don't see the evidence yet. But let's ask our guests. We welcome Deepan and Ashwini yet again. Ashwini, as always, let me start with the technical advice first. A quick word on the way in which the markets closed, a dash of recovery.
The market in this phase, in this year, have been very, very sideways and range bound. And that is what we are seeing even on a daily basis, where, in spite of showing good momentum in the early half, we weren't able to show great momentum in the second half. So maybe stronger triggers are needed. I think most global markets are also acting in a similar fashion, one day up, one day down. So that sort of movement continues. Although broader market is weaker, several more sectors are going down than are going up. So today we will save the blushes by PSU banks and IT, but overall the markets stays sideways to weak.
Okay, so that is the market. Let's move on to the second headline of the day. After months of negotiations, Tata Steel and ThyssenKrupp a group have signed a definitive agreement to create Europe's second largest steel company. The joint venture will be called ThyssenKrupp Tata Steel and will have combined sales of about 17 billion euros. However, this had no bearing on the stock here. Tata Steel ended the day in the red. Nigel is now standing by with more details. Nigel, what are the deal contours and how are brokers here who track Tata Steel viewing this?
Well, that's right. Tata Steel and ThyssenKrupp, they've gone ahead and they've signed a definitive agreement for that promised joint venture. The Memorandum of Understanding was signed way back in September 2017. So this was a step in the right direction. The fear on the street was whether or not they'll transfer that 2.5 billion euros of debt to the joint venture. Now that's happened. So that fear really was taken care of. What has changed? If they go for an IPO, Thyssen has the right in terms of the timing of the IPO, and they'll also have a higher equity stake. So they'll have nearly around 55% stake now. Earlier, they had around 50% stake. Now it's come down to 55% to Thyssen and 45% to Tata Steel. What do they throw up in terms of revenues? Well, it'll be roughly around 17 billion euros approximately. And EBITDA, currently they're doing around 1.5 billion euros or thereabouts. Add to that another 5 million euros. So together, the EBITDA that they'll be able to generate is around 2 billion euros. The timing for this transaction to close out is in this fiscal year itself. Finally, brokerages, they like it. CS as well as CLSA, they view this as a positive, while other brokerages like Jefferies as well as Investec, they are worried if in case the debt burden does shoot up for the company.
On Saturday, we signed a definitive agreement to bring our European steel operations together between our two historic companies. Our two companies emanate from the heartlands of the European steel production with significant operations in 3 European countries. And we are very glad to assemble here in Brussels today because Brussels is the capital of the European Union, and we wanted to express our strong commitment to the idea of the European Union.
Okay, so here's someone who's hitting back at the tariff wars. Well, we have a question, Deepan, for you. Arghya Sanyal has this question on Tata Steel. She says she has 500 shares of Tata Steel purchased at 592 rupees. Oh, has been holding the stock for 4 months, calls herself a long-term investor. What would you tell her? She's lost about 30 rupees.
I think she will make it up pretty soon. The news flow for Tata Steel has been positive, and with this debt overhang of Chorus going away, I think the focus is more on the Indian operations, where there is considerable scope to increase the profit margins and the volume of production as well. And I think Bhushan Steel is a good acquisition, given that it's an existing steel plant, and setting up new steel plants in India is extremely difficult. I think the focus on India will certainly benefit shareholders of Tata Steel, and maybe from these levels you could see a nice uptick in the stock price upswing for the next 6 to 12 months or so. Much further long-term prospect difficult to call, because under the it's a commodity stock, and what happens globally does impact commodity shares per se in India. But I say remain invested for the next few months, at least in Tata Steel.
Okay, with that, thank you very much, Deepan. So, Arghya, not to worry, patience will pay. The third headline of the day, we shift focus to Motown. Auto sales for the month of June topped expectations, with Bajaj Auto clocking the highest sales growth of 65%, followed by Maruti Suzuki. That one reported 36% growth in sales. Well, I must caution you that last year, June was disrupted by the GST launch. Nevertheless, good numbers, but I'll leave it to Sonia to give us a detailed analysis. Sonia.
Yes, it does actually. And in fact, you know, the best of the lot this time is Bajaj Auto, and that's why the stock is up and about quite a bit. So let me quickly run you through the numbers. This time, total sales growth of 65% for Bajaj Auto. It's really the exports that are firing quite a bit for Bajaj Auto. The management told us that not just traditional markets like Nigeria, but the newer markets like Ghana, Iraq, etc. are doing quite well. Even if you look at the motorcycle segment, it's a 65% growth. They did say that they've picked up motorcycle market share. So Bajaj Auto looking pretty good. Apart from that, if you look at Maruti, the numbers were pretty good given that they had 7 days of a maintenance shutdown. Despite that, they saw 36% growth at 1.45 lakh units. Yes, it was less than what they did in the last few months, but as I said, there was a shutdown, so you can't compare it month on month. For M&M, the auto sales look pretty good. 26% growth is what they've seen. Although their SUV or the utility vehicle segment has fallen a bit, the commercial vehicles have done pretty well, a growth of almost 27% there. Talking about commercial vehicles, even Tata Motors numbers were pretty good. Ashok Leyland did quite well. For Tata Motors, it was a 50% commercial vehicle growth. Passenger vehicle sales growth was up 63%, and these were higher than Nomura's expectations. Finally, Ashok Leyland, the total sales growth was 28% year-on-year. Medium and heavy commercial vehicles went up 22%, and at 15,791, not only is it higher than the expectations that Nomura had of 13,900, it's higher than the last 2 months. So April and May, they did 12,000 and 13,000 respectively, and in June, they did 15,791. So looking pretty good for the commercial vehicle sector.
Yeah, thanks very much for that wrap out. We've got questions. Twitter user Abhishek Mehra has got a question. He's got Mahindra and Mahindra. His cost is 924 rupees a share. I think the close today was about 886 or so. He wants to know when will his price about 886 or so. He wants to know when will his price which he bought the stock at come back, and how long will he have to wait? Ashwini, what are your thoughts? How is it looking technically?
See, again, bought at higher level, so really the stock is not at fault, and I don't know if this is a come bonus price, because it is at all-time high. So my sense is he's already making money, and possibly you could see higher levels on auto stocks, particularly monsoon, etc. is good. So we should see, you know, 1,050, 1,100 on the stock soon once the market recovers.
Okay, thanks Ashwini. Let's get to the next query. Twitter user Nikunj has 50 shares of Maruti, which he purchased at 9,000 rupees, and he wants to know if he should hold or sell, and if he wants to buy, then what are good levels to look at? Deepan, that's straight away for you.
First, a disclosure that we and our clients are invested in Maruti, and I think these are good levels to average Maruti as well at a lower price. And we saw the numbers today. I thought we were quite impressed with the numbers per se, and the entire premiumization strategy is playing out extremely well. So you will see volume growth, but more than that, we'll see the value growth as well. And there have been some issues in terms of raw material price increases, but I think those get evened out as the company takes the price increases going forward. And the top models, there still remains a waiting list. So I think everything going positive for Maruti, and ramp up of production, the Gujarat facilities also will benefit further volume growth. So yes, positive on Maruti. One should keep it as a part of the core holdings in the portfolio and hold it on for next 2-3 years or so.
All right, thanks very much, Deepan. We will take a very quick break here. We come back and our experts continue to answer all your stock-related questions. We're back in a jiffy, but before we go into that break, listen to the non-executive chairman of Bank of Baroda, Ravi Venkatesan, on how he thinks the NPA battle will play out. Listen.
We think the resolution cycle is now beginning with Bhushan Steel and so forth. So if that sustains over the next year, I think we are okay. The board spent almost most of the last board meeting understanding how sustainable is this retail phenomenon, because it's quite staggering, right? On a decent base to be able to grow 40%, can we sustain it? We see no reason.
Welcome back. You're with us here on Markets Today Talk Back. The market saw a pretty large dip and then it got bought back. By close, it wasn't looking all that bad. We got through 3 of the 4 headlines which defined the day. The 4th headline is about Vedanta. Anil Agarwal plans to delist Vedanta Resources from the London Stock Exchange. Anil Agarwal's Vulcan Investments will be buying out more than 33% of the non-promoter shareholding for about $1 billion. Remember, UK's shadow chancellor and Labour Party leader had called out Vedanta and called the company a rogue company after the Tuticorin incident and called for delisting from the London Exchange. Meanwhile, the stock here in India, that is Vedanta Limited, ended the day marginally in the green. We've got questions now. Twitter user Jay has a question. He's got 1,000 shares of Vedanta. He's paid 350 rupees each for them. He can hold the stock for up to 2 years. He wants to know, should he stay invested or exit the stock? You want to take this, Deepan? What would you say?
Yeah, actually difficult to answer Vedanta. It's a complicated company with too many divisions and too many businesses and geographical spread as well. But there's no doubt that they've made strides in terms of improving the balance sheet quality as well as making their operations more efficient and more fine-tuned to the kind of situation which is there in the marketplace. My sense is that there could be a trading bounce in Vedanta, and I'm not sure whether a 2-year view is like appropriate. But I think next 3 to 6 months could be good for Vedanta. I think the commodity cycle remains pretty strong, and that should benefit Vedanta. But beyond that, difficult to make a call on any commodity company, Vedanta included.
Okay. I think there is some opinion that we can get from Ashwini as well. What would your take be, Ashwini?
See, the problem is people don't understand how to invest in cyclicals. I mean, if you buy a cyclical at an all-time high, then this is the kind of trouble you get into. I am not sure whether he'll get 350 back, but cyclical generally should be bought when there is great trouble and these guys are going bankrupt and all kinds of problems are there. If he wants to hold on, then he needs to get his average price lower. So right from here till 200, he should be able to average down, maybe get his price closer to 270, 280 and then hold on. Otherwise, he'll hold for many years and the stock will keep returning from 350.
Fair point. We have to understand cyclicals. We have to understand their troughs and their peaks and know that that is how they can be played. With that, the 5th headline of the day, Nifty Bank loses over 100 points, dragged down by, of all stocks, HDFC and Federal Bank. But the Nifty PSU Bank Index ended in the green, and that probably was after the government got into a huddle to finalize the creation of an asset management company to tackle bad assets. Remember, the one that's being headed by Mr. Sunil Mehta, chairman of Punjab National Bank. A question on banks?
Mahesh is writing in. He's got 156 shares of Yes Bank and his cost is 340 rupees a share. He's a medium-term investor and he wants to know whether he should hold or sell. Ashwini, what would you tell Mahesh?
Again, unless the market gets into some sort of a trend, there was no use buying and there's no use selling. So just hang on, build your position. At some point, Bank Nifty, Yes Bank, etc. will break out and then you'll get many higher levels. A lot of these questions are from tired investors who are tired of holding positions. That's the way market is this year and you'll have to hold on, build your portfolio, get the junk out. build positions in strong stocks, and when the market moves higher, you'll get your returns.
Thanks a lot. Ashwini, your take?
I'm positive on Yes Bank. Usual disclosure, we and our clients are invested, and I think that in terms of growth rates, best in class. Some question marks about the quality of the balance sheet and disclosure, but I think management is trying to deal with such issues which have come up in the past. I think that this quarter numbers would be exceptionally good for Yes Bank, and that could trigger an upswing in the stock price.
Okay, so at 340 and 337 today, not a bad purchase at all. That's the word coming in from Deepan Mehta. We wrap up this edition of Markets Today. Talk back on that note. Thank you very much, Deepan and Ashwini, for answering questions from our viewers.